Good morning. We will pay attention to bank reconciliation and internal control over your bank account. The information is given to you for November 2015, but the bank reconciliation statement is given on 31 October 2015, so this is the bank reconciliation for the previous month. The purpose of the bank reconciliation is to see if the bank did all the things that you want them to do. So the first thing that we will do is when we go through the transactions, we will ensure that all these outstanding things that we said the bank must do, whether they've done it or must we still show it as an outstanding amount on November bank reconciliation. Then they give you the cash journals for November, so the cash receipts journal and the cash payments journal. When we reconcile the books of the business with a bank statement, it means that we will complete a bank reconciliation statement, and in this bank reconciliation statement we will record all the entries that the bank still has to do. So we've already done it in our books, but they still have to do. So it's either entries that were not completed by the bank in time, or it's correction of errors. We want to go on where the bank stopped at the end of the month. So it means that we will always carry on at the balance that they give us on the 30th of November, 3,200. It's very important to determine whether this is a favorable or an unfavorable balance. In the books of the business, we will have a bank account, and this bank account to us is an asset. And assets increase on the debit side and decrease on the credit side. In the books of the bank, they will have an account for the business. They will record the entries on the opposite side than what you will record it in the business, because for them this business account is a liability. They have to pay back the money to the business in the future. So if they say favorable balance, in our books a favorable balance will be on the debit side to indicate that we have an asset. In the books of the bank, a favorable balance means that it is on the credit side, because that is the total amount that they owe the business. In the bank reconciliation statement, we will indicate that the favorable balance is a credit balance, and we will start with a balance where the bank stopped. So they stopped at the end of November with a credit balance of 3,200. We will start with that closing balance, indicate the entries that must still be completed by the bank so that we can see if it will reconcile with the books of the business. Check number 090 was issued in favor of child welfare on the 30th of November 2015 as a donation. It was decided to cancel this check and replace it with a new check number 220. No entries have been made. In the first place, you must remember that the check is only valid for 6 months. Then it's too old and it must be replaced with a new check, and you have to cancel the check. So if we look at the dates, the 30th of May was the date on the check. June, July, August, September, October, November. So now it's 6 months old, and this check is stale and must be cancelled. They don't give us information about the amount on the check, so we have to go back to the previous bank reconciliation statement to determine what is the amount on the check. And in the previous bank recon, we see that check number 090 was worth 600 Rand. In this example, we will not complete the subsidiary journals. We will only record the entries directly into the bank account. Now, when we issued this check, we credited the bank because it was recorded in the cash payments journal. If we want to cancel this check, we have to cancel it in the cash receipts journal. That means it will go on the debit side of the bank. And I will indicate that the account that must be credited will be donation, because originally bank was credited, donation was debited. Now we change that entry and we debit bank and we credit donation. That's for the old check that's 6 months old. Then we will record a new check number 220 that is issued. It will be issued and recorded in the cash payments journal. So it must be recorded on the credit side of the bank, 600, and indicate that the donations account will be debited with the amount. Because we only issued that check now, there's no way that that person could have taken the check to the bank to cash the check. So very important, this number 220 that we just issued now for 600 must be shown as an outstanding check. So if we cancel a check, that's step number 1. Step number 2 is we issue a new check, and the third entry will be in the bank reconciliation statement to indicate that the bank will pay out this money in the future. Of the checks outstanding at the end of the previous month, only check number 199 was presented for payment by the bank. So that means that check is not an outstanding check anymore. So in the previous bank recon, we can tick off number 199 to indicate that that check was paid out by the bank. Now check number 170 is also an old check that was issued in previous months. It was still not presented. So there's two options. They will either give you additional information that you know what you have to do with check number 170. If they don't give you any additional information, it means that you will have to go and show it as an outstanding check in the new bank reconciliation statement for November. When the cash journals for November and the bank reconciliation statement on the 31st of October were compared with the November bank statement, the following differences were noted. So now they point out to us things that appeared on the bank statement that did not appear in our cash journals for November and also not on the previous bank reconciliation. The service fees of 63 Rand, interest on credit balance of 25, commission on credit card sales 600. Now all expenses that we pay to the bank is added together to determine what is the bank charges. In this case it's the 600 and the 63 Rand that we have to record as bank charges. Then interest on credit balance. Now remember, this information was taken out of the bank statement. The bank statement does the things opposite to what we did, as I explained to you. So it means if they say it's interest on a credit balance, it is in their books on the credit side. Therefore, it will go in our books on the debit side. So it is interest that we receive on a favorable balance. So we will record this interest on credit balance in their books on the credit side, so in our books on the debit side, as an income for the business, and we will show the 663 Rand in our books as an expense for the business. In our bank account, we will show that the money in the bank will increase with this 25 Rand interest that we received on the current account. So remember, if we pay interest to the bank, it is interest on overdraft. If we receive interest from the bank, it is interest on current account. And then we will show that the bank account is credited with a total 663 Rand bank charges that we have to pay to the bank. Then there's a deposit of 3240 on the bank statement in November. that doesn't appear on the cash journals for November. The first thing that we have to do is to go and see if this deposit was an outstanding amount at the end of the previous month. If we go back to the previous bank reconciliation statement, we see that there's an outstanding deposit. So we indicated at the end of October that the bank still has to record this 3,240. So that means the only amount on the previous bank recon that still has to be, something must be done with it, is the 430 Rand. This one is very important. They will either have to give us information that we must cancel it or do something with this check, or else if they don't give you any information, you must remember that this one must be shown as an outstanding check in the current bank recon at the end of November. A stop order for 1,000 Rand representing the part payment of a mortgage loan to Premier Investments. So we signed a stop order at the bank instructing the bank to pay over 1,000 Rand to Premier Investments at the end of each month. We will only record it in our books when we receive the bank statement where we can see that they've actually paid out this money. So it's just like a check. Instead of us writing out the check, they pay over the money to Premier Investments. So in our bank account, we will record this 1,000 Rand on the credit side. And the bank is reduced with 1,000 Rand on the credit side. The account that will be debited will be Loan Premier Bank. Check number 195 in favor of Costello Wholesalers was correctly made out for 789. On the check counterfoil, it was shown as 879 and recorded in the cash payments journal as such. Now remember, the check and the counterfoil should have exactly the same information on it. So the person writing out the check made a mistake when they wrote this figure on the check counterfoil. Because they wrote the wrong figure on the check counterfoil, the bookkeeper used this 879 figure to record it in the cash payments journal. The bank didn't make a mistake because they say the bank statement is correct. So we made a mistake in our cash payments journal. First of all, we have to determine what is the difference between the two amounts. So we will subtract the two amounts from each other to see what is the difference, and that is 90 Rand. Then we decide, is the amount too big or too little? Now, it was shown as 879. It should have been 789. That means we showed 90 Rand too much on the credit side when we recorded this payment. To correct this, we will have to debit the bank now with 90 Rand. Creditors control account will be credited because when we made the mistake, we put a bigger amount on the credit side of the bank and on the debit side of the creditors control. When we corrected, we corrected on the debit side of the bank, and we also have to correct the 90 Rand on the credit side of the creditors control account because we actually owe them 90 Rand more than what we indicate on the account because we made a mistake. A stop order in favor of Kelly Motors being installment on the motor vehicle. So the bank paid out money on behalf of the business again, 850 Rand, because we gave them instruction with a stop order that they must pay this monthly installment on behalf of the business every month. So we will show in our bank account that the money is going out of the business, so the bank account will be credited. The bank account is credited with 850. We are paying our creditor to show that we owe them less money, and we will debit the creditors control account in the general ledger and we will also debit Kelly's account in the creditor's ledger. An unpaid check for 250 previously received from T5 in settlement of her account of 265. The check was marked RD due to insufficient funds. So it means the bank returned this check to us. When we deposited the money in the bank, we debited the bank and we credited the debtors control. Now we have to do the opposite. So when we received the money, we debited the bank and we credited debtors control. If we want to correct this, we have to show it now on the credit side of the bank to indicate that we don't have the money in the bank anymore, and we will show it on the debit side of debtors control to indicate that the debtors owe us the money again. The discount will also be cancelled, so the debtors will also be debited with that 15 Rand discount, and discount allowed will be reduced with 15 Rand. This is not recorded in the bank account because the bank didn't know anything about this discount. So we will only do a correction now for the 250. The bank account is credited to indicate that we don't have this money in the bank anymore. Debtors control and FAF in the debtors ledger will be debited to indicate that they owe this money to the business. A deposit by a debtor alpha fees for 2,250. On investigation, it was found that this account had previously been written off as irrecoverable. So this previous debtor actually paid in the money of 2,250. So the bank increased with 2,250, but we can't credit the debtor because if we wrote off his debt as bad debts, it means that we closed his account in the books of the business, and if we recover this money afterwards, we have to show that this is an income for the business, so bad debts recovered will be credited. The money in the bank will increase on the debit side with 2,250, and bad debts recovered will be credited with 2,250. An unpaid check for 390 previously received from T Law, a debtor, on the 24th of November in settlement of his account. The check was returned by the bank on the 30th of November, marked post-dated. The debtor will replace this check and it will be deposited again next month. If we receive a post-dated check, we are supposed to put this check in the safe, and only on the date on the check you must deposit the money in the bank. The bank will not pay out the money before the date on the check. Therefore, this check must now be cancelled to show that we don't have this money in the bank anymore, that the debtor owes us the money again, and then when he gives us a new check, we will deposit the new check. When we received the money, we recorded it on the debit side of the bank, so now we have to credit the bank to indicate that we don't have the money in the bank, and we will debit debtors control in the general ledger and our law in the debtors ledger to indicate that they owe the money again. The following items did not appear on the bank statement. So that means that in the business we deposited money on the 30th of November. The bank statement is closed before the last day of the month, so they will only show this 1,925 in the following month as a deposit. We issued check number 215. This person did not take this check to the bank, so we already recorded it in our books. The bank can only record this check when they cash the check, and that will be in the future, so we will show this as an outstanding check. We will show the outstanding deposit to indicate that in the future the money in the bank will increase on the credit side because deposits in our books increase on the debit side. And we will show this check number 215 for 3,600 as an outstanding check because they must still pay it out in the future. We've completed entries now for all the additional information. So before we finalize the question, we must always go back to the previous bank recon to see if there's any amounts that's still outstanding. And remember, I said you must be very careful for this one. So they didn't give us any additional information. This person who received check number 170 must still go to the bank to go and cash the check. So at this stage, this check is still outstanding and will be shown in the bank reconciliation for November again as an outstanding check. So in this bank recon, we will show that check number 170 for 430 will be paid out in the future. After we completed all the entries, additional information taking into account what was in the previous bank recon, and we recorded all of it either in the bank account or in the bank reconciliation. If we have to correct mistakes, we complete it in our bank account. If we still have to complete entries, it will go in the bank account. If the bank made a mistake, it will be recorded in the bank reconciliation statement. And if the bank must still record entries in the future, it will be recorded in the bank reconciliation statement. So you always have to determine, must I record this entry in the bank account because we still have to do it, or must we record it in the bank reconciliation account because the bank must still do it in the future? After we've done that, we will balance our bank account to determine what is the balance so that we can see if our books will now reconcile. So I will add up the debit side, see what is the total, subtract all these figures on the credit side, and work out what is my balancing figure. That balancing figure will be brought down on the debit side on the first day of the next month. If this balance is on the debit side, then we will record it on the debit side of the bank recon. If this balance was brought down on the credit side, we would show it on the credit side of the bank recon. So in this case, it's on the debit side, so we will show the 495 Rand on the debit side of the bank recon. Debit balance as per bank account, and we show the balance there. If we add up the debit side and we add up the credit side, we must get the same totals. If they are not the same, it means that there's still a mistake or something that must be done that's outstanding, and that's why it doesn't balance. If you've done everything that you were supposed to do, these two totals will always balance. Briefly explain what you understand by the term internal control. That's all the procedures, methods that we use in the business. That will be a division of duties so that the same person doesn't receive the money, write out a receipt, deposit the money, buy the new stock, receive the stock, pay the stock. So there must be a division of duties. In the accounting department, to ensure that all your assets, and assets means it's your inventory, the money in the bank, any of your assets will be safeguarded against fraud, where someone that works in the business has the possibility to steal money out of the business because they are responsible for everything in this business. Okay, the second one, explain why it is important to apply internal control. Essential to achieve the profit objective. So if you don't do this and money is stolen or goods are stolen, it means that you won't make the profits that you are supposed to make. So this internal control will help the business to achieve this profit objectives and make the profit that you want to make. safeguard the investment. So the owner and the bank puts in money into the business, either as own capital or as borrowing capital, and they want to make sure that that investment is safe. It is also internal control over assets, for example, your fixed assets, your inventory, cash, so all your assets. Internal control ensures that assets are not stolen and it reduces fraud. Explain why preparing reconciliation statements are important for internal control. Now remember that this reconciliation statements is not only bank reconciliation. We complete a bank reconciliation statement and we complete a creditor's reconciliation statement where we compare our account of the creditor in our creditor's ledger with the account that we receive from the creditor. Comparisons are made between the documents received from outside organizations, so it will either be the bank that sends you a bank statement or a creditor that sends your statement of account. And you will compare your own accounting to these documents that you receive from this outside people, so that you can see what appears in your books and what is the entries that appear in their book, so that you can see if they are the same. If there are differences, there's two options. They can be explained so you can work out what is the reason why they are not the same. For instance, that one of the two, either us or them, made a mistake, or like with a bank that we record the deposits up to the last day of the month and they close their bank statements on the 28th of the month, so there's omissions on their side or whatever. Or there's fraud, and this will cause fraud to be minimized. If you can't explain these differences, it means that you have to go and do investigation and determine why are there differences between our books and the creditors, or why are there differences between our bank and the bank statement. And if you can't determine what is the reason, then you must look at the possibility of fraud. So if you can explain these differences, it will minimize the fraud in the business.